So today I really want to talk about structuring our insurance correctly for our real estate investments. Insurance is not one of those things you want to make a mistake on, because when you discover that maybe you've improperly insured one or all of your real estate holdings, it's usually too late. And unfortunately, a lot of real estate investors and landlords overlook the importance of having the right policies and coverage in place. Look, you can attest to this, a partial property loss, a total property loss, or a liability lawsuit, I mean, that can really financially devastate someone, right?
Detrimental.
Exactly.
Very, very quickly.
Wipe out their life savings, or even, having a judgment filed against you. That can really wreak financial havoc on someone's life. So I want to make sure that that doesn't happen to any of you. So I wanted to go over all the basics and the important points of structuring our insurance correctly right off the hop, just to make sure that you can hedge against any major losses. So with all that being said, let's start with something really basic. Melissa, you can answer this question for us. What is the difference between a homeowner policy and a landlord policy, and why it's really important that they know the difference and pick the right one?
A homeowner's policy covers the house you live in full-time all year round and has special extensions for that property policy. A renter's insurance policy has a different risk with your tenants, and it covers a lot more based on who is living in the house, what it's being used for, and it covers things like your contents, but the contents coverage might be different. It might be $10,000 compared to $150,000. So it's just different coverages.
And it's very important that when somebody's purchasing an investment property, that they make sure they're not just getting a homeowner policy, right? Because they won't be covered.
Right, because a homeowner's policy is a lot different than any form of rented dwelling because of the extensions involved in the homeowner's policy. Mm-hmm. There's a lot more personal property coverage and a lot more personal extensions in regards to that.
And what about in terms of liability? If I had a homeowner's policy on a home and one of my rental homes, and somebody hurts themselves or somebody slips or trips, I wouldn't be covered for any of that, would I?
Not if it was a homeowner's policy. Exactly. Because again, your homeowner's liability covers your personal liability. But if you have a rented house, you're technically not liable for those people that are in your house.
Right. So it's really important that when you have this rental property, whether it's a 1 unit, 5 unit, 10, it doesn't matter, it's important that you're not just getting a regular traditional homeowner's policy, because you won't be covered, right?
Exactly, because with a homeowner's policy, you have things like contents, TVs, clothing, things that aren't in a rented dwelling. Right. So you have coverage, just different coverages. It's just different. It's not that it's wrong, it's just different, mm-hmm, right?
Mm-hmm. So Melissa, how does an investor make sure that they're choosing the right type of policy for their investment properties? And what are all the different kinds?
The best way to choose and to help choose is to be as open and honest with the plan for the building you're purchasing, whether it be a single family home or a triplex or a vacant dwelling or a rented dwelling or a builder's risk. There's all kinds of different types, but the best way is to have somebody to speak to, an insurance broker or somebody that can lead you to the right direction. Okay. You just have to make sure that the end game is where you're both on the same page for the end game.
So you mentioned having a commercial policy as well. Why is that important for investors when they have more than, let's say in my case, you have more than 2 properties, right? That's mm-hmm. when it becomes a commercial yes. policy. Why is that important that they do that as opposed to having each one individual?
So you can have, most companies write up to 2 rented dwellings and they extend them off your house insurance. Mm-hmm. The reason they do that is that's more like a hobby. It's not a business. Once you get into anything more than 2, they start to look at it as a commercial. They should sometimes be in a incorporation or anything like that, and it turns into a different exposure. Again, just a different exposure. Your liability coverage changes, and it all actually gets compiled onto one policy, and it works out very, very well.
Is it safer then for someone who has more than 2 investment properties to have a commercial policy? Are they covered more or anything like that?
The coverage is still the same, but I always probably figure that you're better off to put it in something else other than your personal name,
right,
to make sure that your personal assets aren't up for grabs in the event of a big one.
Any type of lawsuit.
Yeah,
okay,
claim.
Perfect. Does the name of the insured have to match how the property is titled on the deed exactly?
Yes.
That's very important?
Yes.
Okay, what happens if I put it in my name, but the property's in a corporation name.
So the easiest way to explain this is just like a car. When you insure a vehicle, it must be the name on the insurance and the name on the ownership must be exactly the same. If for some reason they're not, there's nobody saying there's going to be any insurance coverage because you're not insuring what you've said you're insuring.
So you wouldn't get coverage.
There's no guarantee that there would be coverage.
Okay.
I'm sure sometimes it happens, but
right.
there's
so that's
no guarantee.
really risky waters. So make sure that you have the exact title of the deed on the name of your.
We run into that a lot when you're dealing with numbered companies.
Okay.
When you're dealing with numbered, because everybody calls and says, "Oh, I'm buying a new house, or I'm buying a commercial building, or I'm buying a rented dwelling," and automatically we just assume when you say I'm buying, it's going into your own personal name. And then 6 months, a year, or 2 years later down the line, when they finally get to looking at their paperwork or their lawyer or somebody gets a hold of the paperwork, it's not actually in their name. So at which point, who's to say the insurance was there and who's to say it's not? Right?
Or what they would have been covered for. Now also, you mentioned numbered companies. Now you could be one digit off and that could also really mess you up, right?
The insurance companies nowadays, because of everything gone so digital, they're really quite good. It takes 30 seconds to amend a name, to fix a name, they generally aren't asking for documents yet, but just for your own peace of mind, you're better off to make sure that those match exactly as they should.
So Melissa, a big question that I know even I struggle with and sometimes I lose sleep over is how can an investor know that they have enough coverage, that they're as protected as they possibly can be? How many times have I called you or texted you in the middle of the night asking, am I covered for this or that? Or are you sure, how can somebody be rest assured that they have all this enough protection?
The best way, I know I've said it before, but the best way to make sure that you have the coverage you need is to make sure that whoever you're dealing with, you are open and honest about what you're doing with the property now, what you're going to be doing with it, what the end game is going to be. It's the only way we can make sure that you have the coverage you need. If you buy a house and your plan is to reno it, but you can't get the permits for 6 months, you need to let us know that so that we can take the steps to put, let's say, a vacancy permit on it, so that when it's sitting empty, kids come in, they light a fire, it's gone. Well, that's not the risk you told me about if it was a rented dwelling all along.
Right.
So it's very important to be open and honest with what you're doing, what your plans are, where you're going, and as soon as you change that plan, you have to call and just to speak to us. It might not always be that we're changing, but it might just be that we have to mark the file for it to know what's going on and where it's going, and so we can notify the companies when it has to happen.
Perfect.
There's all kinds of different extensions we can put onto this stuff. Vacancy, for example, a vacancy permit. It doesn't necessarily mean we have to write a new policy. It just means that we have to add it to the policy for 3 months, let it be. If you're doing a major renovation, it doesn't necessarily mean it has to go to a builder's risk. It just means that it has to have an extension on it for whatever the time is. It's not everything's not cut and dry. So we don't have 100 different policies with one means. Every insurance company touches a little bit with everything, and they have all kinds of ways to add and delete and change coverage as you need it.
Right, and for example, let's say you bought a house, maybe you don't intend on renting it out, but it is vacant for a while, whatever your circumstance might be, and let's say maybe you even have friends staying there for a bit or somebody else. Isn't that important to, even during that time frame, right?
It's very, very important. The insurance company is very accommodating when they know what's going on with it. When they're not so accommodating is when you've said, okay, I'm buying a homeowner's and I'm going to live in it, and you rent it out for a year, and then the tenants in there decide they're going to sue you for no handrailing. And then they find out that way that it never was a homeowner's.
Right.
And that's when things start to fall apart.
And then you're not covered.
Okay. And the other thing you can add on to there to make sure that you're covered properly is loss of rental income, so that if there is a claim, let's say a fire, and your tenants have to move out of the house, it covers you for that loss of rental income in the meantime. So you're not without let's say the mortgage payment or the rents, so that way your mortgage continues to get paid.
Perfect. So Melissa, that brings us to my final question. Do you recommend that all investors make sure that all their tenants have a renter's policy that not only covers their contents, but also some extra liability as well?
Yes. I recommend that most of my clients put it directly into their lease agreements, that they have to have an annual tenants policy. It provides a lot of protection for your tenant that a lot of times they don't realize, besides just the personal property and the liability. There's things like additional living expenses. So again, back to the lost rents, if a fire or something like that happens, it's covered by insurance. It provides coverage for them to move. So if they have to go into a hotel or find another apartment for 6 months or whatever the story is, it provides that coverage to move them, to take everything. So it helps them a lot. But the big thing is it protects you.
Okay. So Melissa, do you have any final advice or tips for any new or maybe even seasoned investors when they're going about structuring insurance and making sure they have the right coverage?
The only thing I can tell you is to make sure that you have got a relationship or building a relationship with your insurance broker or agent to make sure that you're both on the same page. Spend some time. Don't be afraid to call, pick up the phone, and just make sure that everybody, including your realtor, everybody knows exactly what is going on and where you're headed with it.
I really want to thank you for taking the time, Melissa, and answering some of these really important insurance questions for our fellow investors.
Thank you for having me.
Of course. We really hope you take some of this away and make sure that you're always covered so you can sleep well at night and not bug your broker 50 times a day asking and making sure that you're covered. So I love some of the points that you had about building relationships. That's super important, not only in everything that we do as investors or in business, but especially when we're talking about insurance coverages. So thank you again.
Thank you.